Were you aware that Jim Cramer shared the reasons why Wall Street is still bullish on Tesla stock? It can be noted that the second quarter's earnings exceeded the street's expectations. A few days shy of the third quarter's financial report, it appears that Wall Street remains to be bullish on Tesla stock. You definitely would not want to miss this info. It means, of course, margin is going to go up, not down, and that's what I care about, says Jim Cramer. James Joseph Cramer, most known as Jim Cramer, is an American television personality and author. He is the host of Mad Money on CNBC and the anchor of Squawk on the Street. Cramer was a hedge fund manager, founder, and senior partner of Cramer Berkowitz. In 1987, Jim Cramer took his knowledge of the stock market and started his own hedge fund company, Cramer & Co. Cramer ran his fund from 1987 to 2000 and had only 1 year of negative returns. He eventually retired from his hedge fund in 2001, posting an overall annual average return of 24% from 1987 to 2001, and yielding an average of over $10 million per year over the entire 14-year period. In 2005, Jim Cramer signed on to be the host of the CNBC show Mad Money, for which he is most well known. The show's goal is to teach its viewers how to think like professional investors and not to tell people what to think. The show's popularity has risen consistently over the past 10 years, making it one of the most popular investment shows on CNBC. All my career, I've been fascinated by companies with vociferous bulls and ferocious bears, if only because they can be so entertaining, Cramer once said. Jim Cramer's daughter originally introduced the idea of investing in Tesla. In 2019, she was driving from Oregon to LA and decided to rent a Tesla. She wasn't into cars before, Cramer says, but she was amazed by how much she liked driving an electric vehicle and how easy it was to refuel. She said it was the most fun car in the world, says Cramer. His daughter was sold on Tesla, but Cramer himself was skeptical about the company and pointed out that the stock was expensive. Still, Cramer's daughter said she believed in Tesla's CEO Elon Musk. She also said that Cramer held a bias against the company because he was too old to see the potential in electric cars. "I'm going to save up to own a Tesla, and I want to buy the stock of Tesla," Cramer recalls her saying. Sure enough, she bought in and saw Tesla's stock increase 10 times, says Cramer. She had conviction, she did the work, and bought it, he says. And so in 2019, Tesla had a new convert as tough critic Jim Cramer of CNBC's Mad Money turns from an agnostic skeptic to an outright bull on the electric car maker's stock. The Mad Money host declared that he became a true believer in Tesla, which he classifies as a battleground stock. In fact, Cramer said in 2021, Tesla is a huge buy right here. A couple of days ago, Mad Money host Jim Cramer and the Squawk on the Street team discussed shares of Tesla after the company reported disappointing third-quarter delivery figures. Tesla shares closed down more than 8%, only a day after the company released third-quarter production and delivery numbers that fell short of analysts' estimates. Tesla reported 343,000 total deliveries and 365,000 vehicles produced during the quarter, which missed analysts' expectations of 364,660 vehicles delivered, according to estimates compiled by FactSet-owned Street Account. Deliveries are the closest approximation of sales reported by Tesla. Total production increased from the prior quarter of 2022, when the company said it made 258,580 cars. Tesla produced 19,935 of its more expensive Model S and X vehicles, and 345,988 of its more popular Model 3 and Y vehicles during Q3, according to its report. I think yes, it moved up some production, different places, but I take my cue from JP Morgan. They don't like the stock. They've had an underweight, but they did raise the price target, which I think is very interesting. But I do think that you have Wedbush remaining bullish, says Cramer. Talking about margins, inflation, and companies trying to make up for a loss, Cramer said, "The one that'll do the best is Tesla, because he thinks about things like that. The other guys have to scramble, and they're still making internal combustion engines. So I'm speaking with Mercedes this morning about the idea that, going all electric and what an edge it is to be Tesla and not be worrying about the internal combustion engine. Thousands of people that are making cars and trucks that are going to go away in the world." When asked about when he thinks the day will come that there will be truly a competitive set winning out against Tesla, Cramer said that it would be able to produce a run rate of 500,000 at the end of next year. But Ford so far has been incapable of producing what we were hoping, and all the news that affords so far is negative, and that has to do with expenses. Let's do with warranties, commodities, and nameplate problems. So while my trust is on Ford, they've got to be able to do what they're saying, says Cramer. It can be noted that while Cramer became a Tesla bull in 2019, by 2022, Cramer announced that he prefers Ford over Tesla stocks, even though he used to be quite optimistic about Tesla. In a March interview, Cramer shared that he chooses Ford over Tesla stock. According to him, Ford is preparing to oust Tesla from its place and become the leader in the EV market instead. Ford is supposedly planning to produce around 2 million electric vehicles by 2026. However, experts believe that Tesla and Ford are completely in different markets. While Ford may be trying to catch up with Tesla, Ford is still an entire generation behind Tesla in terms of AI developments. Going back to analysts' and experts' opinions on Tesla's production and delivery numbers, Wall Street analysts were divided over the electric vehicle maker's report, and the sliding stock price suggests investors are worried about the delivery numbers. A Goldman Sachs analyst maintained Tesla's buy rating and said the company will continue to benefit from the long-term shift to electric vehicles, while a JP Morgan analyst kept an underweight rating on Tesla, saying that the earnings miss was in line with the firm's expectations. Cohen's managing director for energy, sustainability, and mobility tech, Jeffrey Osborne, wrote in a note following the Q3 deliveries report, Tesla has ample cash and has undertaken a meaningful global manufacturing expansion with facilities in China, Berlin, and Austin, Texas, with the latter two approaching full ramp. While competition in the EV space continues to heat up, Tesla's focus on electrical efficiency and investment in battery technology likely makes them tough to chase in the short term. Cohen has a market perform rating on shares of Tesla and a price target of $244 per share. AB Bernstein senior research analyst Tony Sacconaghi wrote in a note following the deliveries report that he thinks Tesla's ability to hit its guidance range of 50% deliveries growth for the fiscal year of 2022 now seems unlikely. He wrote, Tesla attributed its shortfall in delivered units to increased cars in transit at the end of Q3 and challenges securing vehicle transportation capacity at a reasonable cost. But he noted that vehicle production lagged what analysts were expecting, according to his firm's estimates. Nonetheless, the firm expects the company's margins to look good for the second half of the year. Bernstein has an underperform rating on shares of Tesla and a price target of $150 per share. Deutsche Bank's research analyst Emmanuel Rosner was more bullish on Tesla overall and wrote in a note that the firm sees potential for Tesla's humanoid robot concept, nicknamed Optimus, even though it has only shown a preliminary first-generation version at an AI Day recruiting event on Friday last week. He also noted that Tesla continues to work on its self-driving technology and supercomputer named Dojo for artificial intelligence. He wrote, there remain numerous challenges in the performance of the system that the team is working on, such as lane selection and left turns, but it continues to progress well toward its goals of deploying to the entire North American Tesla fleet by the end of the year. The firm is maintaining its price target of $400 per share and views Tesla as one of the most attractive stories in the auto sector. Tesla plans to report its third quarter earnings on October 19, 2022. Which was announced in a press release by the company's investor relations department. In the said press release, Tesla noted, our net income and cash flow results will be announced along with the rest of our financial performance when we announce Q3 earnings. Tesla vehicle deliveries represent only one measure of the company's financial performance and should not be relied on as an indicator of quarterly financial results, which depend on a variety of factors, including the cost of sales, foreign exchange movements, and mix of directly leased vehicles. Subscribe to Tesla stock to find out why other investors are bullish on Tesla stock.